Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hi, it's Steve and Joe from Everag Insights. And Steve, we're back with another little update. This week's Pulse, some of the moving parts in the outlook that's just being put together, and of course, Chart of the Week. Let's get into it.
Okay, Joe. GDT Pulse had another disappointing event last night. I guess, what are the big takeaways, do you think, from this one?
Well, interesting, yeah. Skim fell again, down a bit from last week's GDT event and down significantly from the previous Pulse. But again, SGX futures were well above, Steve, $135 a tonne above where the Pulse settled last night. So interesting. Obviously, the SGX futures market is seeing something that the rest of us aren't.
Yeah, and Joe, it's the lowest Pulse result we've had since Pulse became a thing. So it's it's always been an interesting relativity, but that's quite a landmark, I guess.
And whole milk powder?
Yeah.
Down again, very much more gentle slope there, Steve. And this time the futures market was pretty spot on, only about $30 a tonne above this.
Yeah, but there's certainly a weaker direction. Very apparent, isn't it?
Absolutely. We have seen in the past that Pulse GDT step down and it's continuing to happen again. So turning to the quarterly outlook, Steve, and these are some of the moving parts that are affecting the outlook for global dairy markets.
Yeah, Joe, I don't want you to think that we're going to go right through this list and bat through all the parts. I guess the other thing that's really apparent here is the bearishness of the outlook.
Yeah, not too many in that bullish list, is there?
No, we struggled. We've got some there, Joe, that you can look both sides of them.
Yeah.
I think particularly on the production side of that chart, there's a double edge on a couple of those issues. But I think particularly, say, we look at headwinds for milk production in both EU and US, and then there's that issue about milk solids. We'll come on to that, but look to in the interest of time, I thought we could call out three.
So I think we're going to have a chat about what's been happening in trade for powders in the last little while, because we have seen some fairly significant increases in trade volume, Steve. And we've just been looking through the New Zealand data that's come out for February. Whole milk powder exports to China doubled in February. They've been up 27% in the period from November to February, but of course down 11% for the season to date. So you can just see in that darker line there, lower trade earlier in the year, and then at lower prices just in this last 4-month period or so, we've really seen that trade volume pick up, Steve.
Yeah, there's a theme there, Joe. I think this, low price clear out is what really is going on. You'll see it more apparently when you look at, I suppose, across commodities. Joe, this is sticking with New Zealand, who have been the major beneficiary of what we're calling a stock clearance.
Yes.
Clearance sale. This just shows the changes across commodities in different time periods, and that big February increase in volume out of into the Chinese market was part of the whole milk powder story.
Sure.
Trade doubled effectively in that month. So what we've added up here, though, Joe, is just looking at the last 4 months, when 4 months of trade data. New Zealand, that's through to February. We don't have that for the US and Europe. But in that period, New Zealand has grown in milk solids equivalents, grown its trade 15% year on year. So it's pretty encouraging. Europe gone 6% in the period to January. The US conversely has dropped 9%.
Yeah.
Now, in the case of the EU, Joe, the beneficiary has been cheese. It's been a standout product, and you've got a bit to say about that later, which is some of the background to that. So it is quite a stark, the performance of exporters is quite stark here.
Yeah.
And
yeah, what does it mean for New Zealand is something else we were just discussing, Steve. And this is the milk solids equivalent that's been exported from New Zealand over the last few months. And again, up 38% in February, 15% for that November to February period. But production 7% up for the season to date. But interesting to note, Steve, that milk output for New Zealand is only up 1.7%. So what we're really seeing is some destocking. There's a clearance, as you say, a clearance sale. We would expect that there's not a lot of product lying around in New Zealand unless we get a bit more of a kick at the end of the season.
The thing that we're discussing is buyers are taking advantage of essentially a trough in pricing.
Sure.
With the headwinds on production, in the US and the EU, and New Zealand's only just gone above the line, really. The expectation is that things are going to get tighter, and we're at the bottom for ingredient pricing, so stock up.
Yeah, that seems to be what's going on. But I guess the question that we have, Steve, is there demand at the other end actually pulling that through? That's the big question.
That's far less clear when you look at some of the macro factors.
Sure. What's the next thing we're going to have a look at, Steve?
So, Joe, we're going to talk about milk solids versus milk volume. There's a lot of focus given on the headline numbers. Milk production is weaker, and you can see here how it's trending for the top 5 producers. But in reality, solids are well up. It's apparent in both US, Europe, and New Zealand. And what's that about, Joe?
Well, I mean, over the long term, we've seen a long-term trend in higher components in milk, and that's just through better breeding. But I think you could say in the last few months to 12 months, we've had pretty low feed prices and pretty good milk prices in a whole lot of regions. So the margin's been there to actually feed a bit better, and we're seeing that in terms of the components in milk, as you say, across those 3 major producing and exporting regions.
So, Joe, that adds up to more commodities.
Yeah.
Because in those major producers, US and Europe, fluid milk sales are negative. That's, just adding to the manufacturing milk volumes, and when you've got more higher solids, so we're seeing greater cheese output and other ingredients. So, Joe, the final call out here is, speaking of the demand side, again, is about what's happening in ingredient demand. And we're talking about demand for ingredient use in the industries of production. So essentially Europe and US, and I suppose other developed markets, but they're the big 2 where we've got good data in these areas. So the big shock that we're seeing, and you're covering this in the Globe this week, Joe, this is a sobering piece of news that cocoa prices have reached record levels.
Yeah, I mean, we've just seen that very precipitous increase in that chart there. They've risen quickly, and what's more, there's not any sign that they're going to come down soon. And the issue for chocolate manufacturers is a lot of them have been able to hedge and cover themselves for this period and even into this year. The talk is that these issues are going to be around for another 12 months or so. And when that coverage runs out, that's when the issues are really going to hit for chocolate manufacturers. And bearing in mind, we've already had a fair pass-through of price increases. There's another wave coming. So what we're seeing, because this is a more almost a structural issue and long term, we're starting to see those manufacturers reformulate, reduce bar sizes and repackage and not change the price. And that's obviously got fairly significant implications for dairy demand. And Steve, you've got some data here from Nielsen that really lays this bare.
Yeah, Joe, this is just looking at the European retail data, looking at the major ingredient uses across food categories, and this is looking at both skim and whole milk powder are used in these products, but in Europe it's mostly skim milk powder, showing that chocolate year-on-year trends there. You can easily see when Christmas occurred there, in those bars. But, chocolate is not the only story going on. Other categories are seeing, worse volume declines, but you're saying, based on that analogy you talked about, that this is going to get a lot worse in terms of that chocolate sector demand, in terms of volumes. 100%.
And some interesting figures there, Steve, about how much of skim milk powder is used in some of these products. So for chocolate, it's 30% of skim milk powder, and for ice cream, it's 22%. So fairly big volumes in terms of demand.
Yeah, absolutely important. So not turning the corner anytime soon. Okay, Joe, chart of the week.
Yeah.
What's your take this week?
So chart of the week, we flipped across to Europe here, and I guess the interesting thing from this January data, milk is still down, but what we're seeing is manufacturers definitely prioritising cheese. So cheese production, despite reduced volumes of milk, is up, and all of that production is coming out of skim milk powder and butter. And just bearing in mind that we had all that activity in February around butter pricing, when there was almost a panic in the market about the tightness of butter availability. And this really paints that picture, Steve, that butter production has really been constrained.
That tightness, Joe, was, you'll recall fondly, was one of the highlights of Dubai.
Yes.
At Gulf Food.
Sure.
It was mostly talked about. So, Joe, we've also got, interestingly, that tightness question. Is it tightening the market? Just the reconciliation of stocks we were able to do in December with data that came out of Europe, out of the Commission, reconciling to December. But it's, December stocks, we're in the end of the year. So is skim milk powder certainly low stocks?
Yes. But are they tight, Steve?
Tight. Tightness is a relative term, isn't it? You need some pull to make it tight. You need some demand side action, which isn't the case. So while everyone's talking about tight stocks, no, I think they're low.
Yes, 32% down year on year.
That's right.
But not necessarily tight. So what about butter, Steve?
Well, that is probably pretty tight. We've seen the post-Christmas, the expectation the market would loosen, but it stayed tight. So there is still some tightness there.
Yeah, those prices are still fairly well elevated in Europe, and that indicates there's still pretty good demand there.
Yep.
We're still below that $6,000 a tonne threshold where we expect to see some pushback, but demand is definitely there. So stocks are low and tight then.
Yeah. Maybe a different story, Joe, after Easter. The Easter business is all done, of course, but now we're getting into the flush, and the expectations are that we're going to see a bit more milk, a bit more fat around. Will this be something that sees the market weaken as we get into May and June? That's a big watch out.
Absolutely.
Well, that's a wrap. That's all from us. Thanks for watching. We'll be back next week.